I have been trading for the last 8 years, and I've tested hundreds of trading strategies. ICT, SMC, supply and demand. But the problem is that all of these strategies are complicated, or they simply don't work. In the last 2 years, I've managed to make a full-time income using one strategy that only requires 20 minutes of work per day. It is simple, repeatable, but the best part is that it does not require a complex daily bias or to learn 100 different concepts. In today's video, I'm going to explain the full strategy, and I'm going to backtest it over a 1-month period to show you real results. Now, before we get onto backtesting, we need to understand what this strategy is and how it only requires 20 minutes work per day. Now, this strategy is very simple, but it has a couple steps that I want to talk about so you know exactly how to trade it. Then I will show you the backtesting results of this strategy over a 1-month period of time if you only traded this one strategy. So here is how this strategy works. Step 1 is simple directional bias. So when the 50 exponential moving average is greater in price than the 100, which is greater in price than the 200, this indicates to you as a trader that you have a long daily directional bias. So that will mean that you're only going to be looking for long positions. So this is a very, very simple way to understand when you're going to be looking for long trades. It's very important to note that we do not care about the gradient of the exponential moving averages. We also do not care about the distance between them, because this would bring a lot of subjectivity into your trading. All that we care about is, are the EMAs in order? If so, then you have a uptrending market. We also do not care where price is in relation to the EMAs. So even if price action came down and was below the 200 exponential moving average, as long as they are still in order, you would still have a long bias market. Vice versa, if the 50 exponential moving average is on the bottom, the 100 is in the middle, and the 200 is on the top, this would indicate to you as a trader that you have a sell bias market, and so you would only be looking for shorting positions. But we also need to know when to be sitting on our hands and when to be waiting. And so this was originally a sell bias market because we had the 50, the 100, and the 200. However, the 50 exponential moving average crossed over the 100. And so this would indicate to you as a trader that you have no bias in this market. And so what you're going to be doing is you're going to be sitting on your hands. You're going to be waiting until you get evidence to suggest that you have trending market conditions. So it's very important that you develop the discipline to be able to sit on your hands and to wait when the conditions are not correct. You see, a lot of traders get emotional, or they undergo the emotion of the fear of missing out, which is FOMO. And many traders believe that they always need to have a trade on in the market. And so having a very simple filter to know when you should be sitting on your hands and staying out of the market is absolutely vital to many traders. Step number 2 will allow you to time the market correctly. And so step number 2 is a session-based liquidity sweep. So let's say that we had identified a long bias market, right? The 50, 100, 200 EMA based on the framework that I've just given you. Well, what you're going to do is you're going to mark on the previous session's low. So you're going to be navigating the New York session. And when you're trading the New York session or the New York kill zone, what you need to do is identify where is the sell side liquidity resting. And so we have sell side liquidity resting below the London session low. We also have sell side liquidity resting below the Asia low as well. So all that you're going to be looking for is for price to come down and trade lower, below at least the London session low, if not also the Asia session low as well. Price doesn't have to trade below both of these sessions, but as long as it trades below one of these sessions, we can classify that as a liquidity sweep. And a liquidity sweep is ensuring that you're going to be getting a discount in the market. So think about it like you're waiting for price to come to you. You're being patient, you're being disciplined, and you're, rather than FOMOing in at the high, you're waiting for this discount in the market. And this liquidity sweep, this is going to be doing 2 different things. Number 1, this is going to be inducing traders short into this market, thinking that this is a breakout to the downside. What this liquidity sweep is also going to be doing is it's going to be stopping out any early buyers. So imagine that you bought in the London session. A lot of traders are going to have stop losses below London low and below Asia low. And so this liquidity sweep, this is going to be stopping traders out. And therefore, this is ultimately what is providing sell side liquidity. Step number 3 will allow you to know what to look for a valid A+ confirmation. So all that we are looking for, once we have seen a liquidity sweep below the London low or below the Asia low, is a 15-minute bullish confirmation. So I want to make this very clear. Everything is going to be on the 15-minute time frame. So once you have seen a liquidity sweep, all that you're waiting for during a New York kill zone, so every trade that you're going to be taking is going to be within this window right here. And so once you see a 15-minute bullish confirmation, you're going to enter not on the closure, but you're going to enter on the break of the high. So when you're bullish, when you're longing, you always want to enter as momentum is pushing and we break the high, because this is going to increase your win rate. Also ensuring that you're taking trades during the New York kill zone between 8:15 and 10:30 a.m. Eastern will ensure that you are entering the market during a high volume session when you expect a lot of volatility and a lot of volume to come into the market. Step 4 will allow you to know where to place your stop loss and where to place your take profit. And so once you have seen a valid confirmation right here, so a bullish confirmation during a New York kill zone after you have seen a liquidity sweep, your entry, as I said, is on the break of the 15-minute bullish candle high. Your stop loss will go below the liquidity sweep low. So not necessarily below the confirmation low, but below the liquidity sweep low. And then what you're going to be doing is you're going to be targeting a fixed, mechanical, repeatable 1 to 2 risk to reward. So you're not going to be looking for a home run. You're just looking at taking this small, repeatable, reliable piece out of the market that is proven, that is backed up by years and years of data. Then this leads me on to the final step. And the final step is ensuring that you are only taking trades during trending market conditions. So that is when the EMAs are in order. So you have either a bullish market, a bearish market, or you have a no bias market. Remember when the EMAs cross over, and during that period, you would be sat on your hands and you would be waiting. It's vital to ensure that you're very strict with the times that you're going to be entering into the market. So making sure that it's only entering during the New York kill zone, because this is when the most amount of volatility is actually coming into the market. The next is to ensure that you have low risk and you're ensuring that you're targeting a high risk to reward. And what I mean by that is just ensuring that every trade that you take, you ensure that you're targeting at least a 1 to 2 risk to reward. So that means that you can contain your downside risk and you're going to make 2 times your unit of risk every single trade. And the final thing is, just keep it as simple as humanly possible. So many people are overcomplicating, so many traders are overcomplicating their strategies using ICT and using order blocks and using supply and demand. But my philosophy is really just to keep things as simple as humanly possible, to make sure that when you are making trading decisions, they are simple, they are easy, and you know why you're going to be entering or exiting the market. So that is the strategy in a nutshell. Now let's look at a 1-month backtest to show what I've just taught you and to put it into real time and to show you real results. But the first thing that I want you to note here is that this is a one time frame strategy. All of the analysis, execution will be on the 15-minute time frame. So very quickly, let's set up the exponential moving averages and let's set up the session indicator. So first of all, head over to the indicators tab at the top of your screen. And if you type in EMA 20, 50, 100, and 200, it's this indicator right here by Dr. Sweets. Then I want you to double click the exponential moving average. And I want you to uncheck the 20. So this top box right here, this is the 20. We don't need that one. And so all that you're left with is the 50, 100, and 200. So I've made the 50 in green, the 100 in blue, and the 200 in red. Then click OK. Next, to set up the session indicator, if you type in trading sessions -sonar lab, it's this indicator right here by view trading. So if you click this, apply that to your chart, and again, double click the indicator. The correct kill zone timings are to set your time zone to GMT. Set your Asia session from 2300 to 0400. Then set your London session from 8 a.m. until 10 a.m. And then finally set your New York session from 1 p.m. to 3:15 p.m. And then I want you to click OK. Then I want you to navigate to the bottom right of your screen, and you can see that this is set to the New York kill zone. And I like to do that because it keeps it very standardized for everybody that is following along. And so if you click New York at UTC -5, and then if you just double check the settings of the indicator. So if you look very closely at the bottom of my screen, you can see how it tells you the time. And so that should be Asia session from 6 p.m. until 11 p.m. Eastern. We have London session from 3 a.m. until 5 a.m. And we have New York session from 8 a.m. until 10:30 a.m. Eastern. So remember, that is New York time. So now that you're all set up with the relevant indicators, let's just dive straight into a full 1 month backtest. It's very important to note as well, as I said, we're only trading the 15-minute time frame, but we're also only trading 2 assets. So we're trading gold and we're trading US 500 or ES. So that is because from my own backtesting and years and years and years of data, this seems to perform the best on these 2 assets. So we're only going to be trading these 2 assets in this backtest. Okay, so we're playing this on to the start of the New York kill zone. And straight off the bat here, you can see 50, 100, 200 exponential moving average. So this indicates that we have a long bias, and so we will only be looking for long positions. Next, we need to identify sell side liquidity. Well, we have that below London low, and we also have that below Asia low. So we're looking for price to come down and take out sell side liquidity, giving us that discount in the market. So we're waiting, and we have seen sell side liquidity taking out right here. Then we're waiting for our confirmation, which is a bullish 15-minute candle during a New York kill zone. Remember, between 8:15 and 10:30. So this candle closed at 10 a.m. Eastern. And so we can enter, remember, not on the closure, but on the break of the high. And then invalidation, your stop loss goes below the liquidity sweep. And we further target a fixed mechanical 1 to 2 risk to reward. And so this trade was tagged in right here. And then it's just a case of setting and forgetting. You just allow the trades to play out. And if you look very, very closely, this trade was actually stopped out right here. And so this results in a -1 R, which is -1 times your unit of risk. So let's look at the second trade example. So similarly, we still have a long bias market, right? 50, 100, 200, and so only looking for long positions. Sell side liquidity below London low and below Asia low. So this is unmitigated, which means that it has not yet been taken out. And so we're looking for price to come down to give us that discount, right? We're not trying to predict the markets. This is very important. We're not trying to accurately predict, but we're more so looking at reacting once we have seen a liquidity sweep. So this right here is what I call an extreme liquidity sweep, an extreme manipulation, where what that means is we take out London sell side liquidity, London low, and we take out Asia low within the same liquidity sweep. Then all that we are waiting for is, can we get our confirmation? So we get our 15-minute bullish confirm right here. This is at 9:30 a.m. Eastern. And so we can enter on the break of this high, invalidation below liquidity sweep, and then target a fixed 1 to 2. So this trade was tagged long right here, and then it's just a case of setting and forgetting. So don't interfere. We've had quite a significant drawdown right here, and it's very important that you do not micromanage, you do not interfere, and you just allow these trades to play out. And the expectation is we get a sort of V-shape recovery. And this trade did take profit right here for a 1 to 2 risk to reward. Notice as well how when you get a very sharp, aggressive liquidity sweep, often you find that the V-shape recovery is also aggressive and it's also fast, because the price action to the left, there's not much supporting this move. And if you just think logically, like, where is the liquidity resting? Well, it's above this New York high right here. Another thing to note is, yes, I'm talking about only navigating and trading the New York kill zone, but this also does apply to London as well. So if you want to take trades in London, you can, and I also do as well. You would make sure that you're only taking trades between 3 a.m. Eastern up until 5 a.m. Eastern. But I will note here that most of the trades that we take and that I take, they are setting up in the New York kill zone. So similarly to navigate London, you can see we have Asia low right here. And so you're looking for that liquidity sweep below this level. So we get that right here. And then also you're waiting for your confirmation during, remember, it has to occur during the kill zone. And so you can enter on the break of this high. with a stop loss below the liquidity sweep and look at targeting a 1 to 2. So this trade was tagged long right here, and then it's just a case of setting, forgetting, and just allowing these trades to play out. So I want to make it very clear, like 90% of the trades that we take are in New York because that's just when they tend to set up. But you will occasionally get the odd trade in London as well. And so as you can see, this did hit take profit for a 1 to 2 risk to reward. With, there was some significant drawdowns, right? This one around 60% towards your stop loss. And you can see as well, if you went break even here, you would have been stopped out at break even right here. And that's why it's so important to just allow the trades to play out and to give them breathing room and just to leave them alone. On the same day, there was also another trade right here. So again, we are still long buyers. And you can see we take out this unmitigated liquidity that was resting below the London low, this sell side liquidity. We then also confirm at 10:15 a.m. Eastern. And so again, this is okay to get long. So long on the break of the high, stop loss below liquidity sweep and target a 1 to 2. And so I remember being tagged in this trade as well. And what it actually did was it broke the high first. So it tagged you in and then it stopped you out. So you had 2R here and then you had a -1R right here. And so you would have ended the day plus 1R. It's very important that you don't then go chasing profits or chasing the market. You've had your opportunity. If price was going to continue, well, it was likely to continue from here, and it did not. And so it's your job to be disciplined and to walk away from the markets, to go and come back the following day or the following session. So now let's look at the next trade. So again, we are looking at US 500 and we are bullish. Again, 50, 100, 200. And so what we then need to identify is, okay, where is the unmitigated sell side liquidity resting? Well, it's below Asia low, right? And you can see we've started to just get bearish continuations off the back of the start of the kill zone. And so we're waiting for price to come down to manipulate and liquidate below this Asia low. So remember, this is going to be doing two things, right? Stopping out early buyers from London and also inducing a lot of traders short into this market, thinking that the price is going to go lower. And so we get another confirmation. This is at 9 a.m. Eastern. We can enter on the break of the high, stop loss below liquidity sweep and targeting a fixed 1 to 2, remembering not to go for that home run. And so tagged long right here. And as you can see, the 1 to 2 was hit within 45 minutes. It's very easy to look at the continuation and beat yourself up about how you could have bagged yourself a 1 to 4 or a 1 to 5. But just remember, that is not your trading plan. That is not your job. That is not what you're looking to do, right? You're just looking at taking that small, repeatable, bite-sized piece out of the market over and over again. Okay, so we're looking at gold right here. And this is, I think, the first shorting opportunity, right? You can see 50, 100, 200. So yes, they're very close together. Do we care about that? Not at all. we also don't care about the gradient. And so we're expecting, or we want to see, we have no expectations, but we want to see the discount. We want to see London high taken out during or even before the kill zone is okay for a liquidity sweep. But it's vital to note that the confirmation has to occur during the kill zone. And so we take out London buy side liquidity right here and we confirm. So we get our bearish confirm during kill zone. So we can enter on the break of the low, stop loss above the liquidity sweep high, and then target a 1 to 2. So tagged in right here, and then it's just a case of just detach from the outcome and just allow the trades to play out. So right here, the problem that we have is that we have FOMC, which is an economic news event. And because this is a restricted news event, you would always close your trade 30 minutes before the restricted news event, because these news events can create a lot of slippage, a lot of volatility, which could create a lot of damage to your personal account or your funded account. And so this trade would have been closed right here ahead of FOMC at around break even, because you just don't know, right? And our goal as a trader is we're not looking at gambling, right? And so it's important to mitigate as much risk as possible. So the only time that I will micromanage a position would be if you have a restricted news event, which is FOMC, NFP, and CPI. That is the trio of news events that I would actually micromanage. And so it's not very often when you would be micromanaging. And so this trade is closed out for around break even 0R, and you can see you sort of prevented a loss here. So it's important that you have a very mechanical way to navigate restricted news events, and then being disciplined to stick to that and ensure that you're following that rule and that plan every single time. So now let's look at another trade example. So right here, 50, 100, 200, sell buyers, right? You may be thinking, did you get an opportunity in London? And you can see we did not, because we did not come above the Asia high, right? We did not mitigate that sell side liquidity. So that is exactly what we get right here. And this candle closed at 10:15 a.m. Eastern. So entry on the break of the low, stop loss above, liquidity sweep high, target a 1 to 2. So we would tag short right here, and then we just need to allow it. And as you can see, this trade was a -1R. So you took a loss here for -1 times your unit of risk. Let's take a look at another example. So US 500, 15-minute time frame. We have London high taken out. We are sell bias. We're only looking for shorting positions. And so we're waiting for a confirmation. So the EMAs granted are very close together, but as I said before, the distance doesn't matter. The gradient doesn't matter. As long as they are sell bias, they are sell bias. And so we get a confirmation right here during kill zone, stop loss above, not the confirmation high, but the liquidity sweep high, and then target a 1 to 2. So tagged short in this trade right here. And as you can see, this did hit take profit for a 1 to 2 risk to rewards. You would have took 2R out of the market right here. So again, sell bias market 50, 100, 200. So this is again on US 500. We've took out London high. We have not yet mitigated Asia high. And so we're waiting, we're during a kill zone, okay, and we need to see buy side liquidity taken out. So this is your raid of buy side liquidity right here above the Asia session high, and this is at 8:30 a.m. Eastern. So entry on the break of the low, stop loss above liquidity sweep high, and then target a fixed mechanical 1 to 2. So tagged short right here, quite a nasty sort of drawdown towards stop loss over there. But again, just leave it alone and just allow the trades to play out. And as you can see, this trade did hit take profit for another 1 to 2. So that is another 2R taken on this trade right here. So I manually backtested 60% of the month, and I didn't realize like how many trades there was going to be. And so what I've got in front of you right here, you can cross-reference this, but you can see all of the executions that we covered so far, all the way up to the 16th of December right here. And the result at the end of the month, if you look at this column, so the R multiple, which is really what is important, what is your risk to reward, and as you can see, the sum of the month was 10.86R. So if you look at the bottom of the screen, you can see that right there. In the month of December, with a 1 to 2 risk to reward, this strategy had around a 56% win rate, which is slightly higher than usual. In general, we have around a 50% win rate. So it's up to you if you want to take my word for it, but I actually encourage you to go away and to look at these trades yourself, and you can also do your own back testing. As you can see right here, in terms of data and what I'm plotting, we have the date of execution, the day of the week, the sessions of the kill zone. As you can see, there was only one trade that was actually taken in London, and that's what I was saying. Majority of our trades do happen in New York. We have the time of execution. This is the UK time, and then you have win, loss, break even, P&L, the R multiple, the asset that you're trading, and then also the stop loss size and the link to the trades. And so it's very important to show you the real results of this trading strategy. But I also want to keep it as real as possible, because not every month is going to be like this. As a trader, you're going to have winning months, you're going to have losing months, break-even months, and that is the reality of trading. And because we're trading random distributions, we don't know what we're going to get. And that's why it's very important to not have any pressure about what you're expecting to make or what you sort of have to make, because the market will give you what the market will give you. And so what I'm sharing with you today is literally just the tip of the iceberg when it comes to what I'm doing. So if you would like to learn more and you would like to see me trade live every single day, where I hold your hand every step of the way to ensuring that you become consistently profitable, where you join a community of like-minded traders who are also in a very similar position to you, but you can also learn from other experienced traders that have been within the exclusive community for years and years. And you can reach out directly to myself. So if you have any questions regarding strategies or psychology, you will have direct access to myself. And so if that sounds like something you may be interested in, then make sure to check out my exclusive community. The link is in the description down below. If not, I also strongly encourage you to check out my free Discord community. The link is also in the description down below. As always, thank you so much for your time and your support, and I will catch you later. Take care.